Welcome, dear traders. US stocks closed last Friday with losses. All three benchmark indexes suffered their fourth losing week in five, dropping to the two-month lows. And today, stock futures drifted lower. Asian shares are also in the red, as Wall Street is gripped by pessimism. This week is going to be tense and volatile. And let's figure out the reasons. This week, traders are anticipating a series of central banks meetings. Of course, the main focus is on the Fed's meeting. However, speculators will also take notice of the policy meetings of the Bank of Japan, the Bank of England, and the Swiss National Bank. They are going to announce their key rate decisions. Apart from that, traders' floors in some countries will be closed. It may trigger sharp price swings. Trading week in Japan will be far shorter as the country celebrates respect for the Aged Day on a Monday. Friday is an official holiday in the country. Nevertheless, the main highlight of the week is the FOMC meeting scheduled for September 21. Given the recent economic reports, consumer prices in the United States are gradually growing. Analysts are certain that the Fed is highly likely to raise the key rate aggressively. Now, it's the blackout period. Before that, Jerome Powell and other Fed policymakers repeatedly stated that the Fed's top priority is to push inflation to the target level of 2%. And this is why the regulator is going to stick to a hawkish stance for a long time until inflation is under control. So traders are now pricing another rate hike by at least 75 basis points. According to the CME FEDSWATCH tool, the likelihood of a 100 basis point rate increase totals 21% today, which is slightly lower compared to the previous week. As the Fed is strongly committed to maintaining a long-term monetary tightening cycle, the US dollar is sure to benefit from it. The US economy remains resilient despite slowing global economic growth. It boosts demand for the US dollar as a safe haven currency, and today the greenback is trading steadily in anticipation of the key rate decision on Wednesday. During the Asian session, it was trading in the price corridor of 110.01. After a two-week period of a high volatility and breakout of a decade high of 110.79 on September 7, the US dollar moved to consolidation. As the Fed meeting is approaching, the greenback is trading in the sideways channel of 109.49 and 110.11. On a Thursday, the Bank of Japan will halt the meeting, while other central banks are tightening monetary policy to curb inflation. The Bank of Japan is widely expected to maintain its ultra-soft stance. However, analysts do not rule out that at some point the regulator will have to join the ranks of hawks. There are rumors that the Bank of Japan policymakers are discussing such a possibility. At least they stopped using the word transitory when describing inflation in the country. Although the inflation rate in Japan is at 2.6%, which is far lower than, for example, in the United States or in the UK. It may increase due to the depreciating yen. The yen was supposed to climb amid the consolidation of the US dollar and the hawkish rhetoric of the Bank of Japan about possible intervention. Yet it did not happen, and the yen gave in to the greenback. As a result, the dollar-yen pair was rising in the Asian session, trading at 143.44. A strong resistance level is located at 145. The pair is now moving below this level in the range of 142.61 and 143.54. The Australian dollar is also retreating amid a robust rally of the US currency after Friday's fall to 0.6670, the lowest level since mid-2020. The AUD USD pair tumbled to 0.6687 on Monday. And today China has lifted lockdowns in several big districts. This news may stir up optimism, fueling risk appetite, which is bullish for the Aussie. However, so far neither the Australian nor the New Zealand dollars have been able to recover following this news. The Aussie keeps declining, moving in the bearish corridor of a 0.6680 and 0.6735. And the New Zealand dollar sank below the psychologically important level of 0.6000 today. It's trading with a bearish bias at the level of 0.5955. During the Asian session, the Kiwi could recap its early losses. It's expected to move between the resistance level of 0.6003 and the support level of 0.5950. These are the main highlights of the Asian session. Apart from the central bank's meetings, investors are also awaiting inflation data from Japan and Canada. The US, the UK, France, Germany, Australia and Japan are going to unveil their manufacturing PMI indexes. Subscribe to our channel and have the latest market news at your fingertips. See you soon.